The finance leaders are now responsible for not only financial reporting but also for managing the company's risk, ensuring compliance with regulations, and overseeing the implementation of new technologies. The finance leaders are facing a multitude of challenges in their roles. Here are some key areas where CFOs can focus their efforts to stay ahead of the regulatory landscape. Identify and mitigate environmental risks. CFOs must assess the environmental impact of their company's operations and identify opportunities to reduce its carbon footprint. Ensure social responsibility. CFOs must ensure that their company's practices align with social norms and values, and that they are transparent about their social and environmental impact. Governance and oversight. CFOs must ensure that their company's governance structure is robust and that they are overseeing the implementation of ESG policies. Risk management. Identify and assess risks. CFOs must identify potential risks and assess their likelihood and impact. Develop risk management strategies. CFOs must develop strategies to mitigate or manage identified risks. Monitor and report on risk. CFOs must monitor and report on risk exposure and implementation of risk management strategies. These new mandates are aimed at strengthening the resilience of the financial system and ensuring the integrity of financial markets. Enhance the resilience of financial institutions. Improve the ability of financial institutions to respond to cyber attacks. Increase transparency and accountability in financial reporting implementation timeline. The Act will come into effect in 2024. Financial institutions will have until 2026 to implement the necessary measures. VAT in the digital age. VAT in the digital age is a European regulation that is reshaping tax collection and reporting in the digital economy. The company's stock price plummeted by 40% in the following months. The SEC investigation was prompted by a whistleblower who reported that Kraft Heinz had been misrepresenting its cost savings. The whistleblower's report. The whistleblower, who was not named, reported that Kraft Heinz had been overstating its cost savings by $208 million. The report claimed that the company had been misrepresenting its cost savings by using a flawed accounting method. Human oversight and judgment are still essential for ensuring compliance and accuracy. The use of AI in compliance activities is not a new concept. In fact, it has been around for several years. The first AI-powered compliance tool was introduced in 2018. Since then, the technology has evolved significantly, with many more tools and platforms being developed. These tools are designed to automate routine tasks, such as data analysis and reporting, freeing up finance professionals to focus on higher-value tasks. Some of the key benefits of using AI in compliance activities include improved accuracy. AI can analyze large amounts of data quickly and accurately, reducing the risk of human error. Increased efficiency. AI can automate routine tasks, freeing up finance professionals to focus on higher-value tasks. Enhanced decision-making. AI can provide insights and recommendations based on data analysis, enabling finance professionals to make more informed decisions. Reduced costs. AI can help reduce costs by automating routine tasks and minimizing the need for manual intervention. However, there are also some challenges associated with using AI in compliance activities. These include data quality issues. AI is only as good as the data it is trained on. The AI-powered AP system streamlined processes, reduced errors, and increased efficiency. Improving financial processes with AI-powered accounts payable. Imerys, a leading global supplier of specialty chemicals, was facing significant inefficiencies in its financial processes. The company's existing enterprise resource planning (ERP) systems were cumbersome and made compliance a challenge. In an effort to address these issues, Imerys decided to implement an AI-powered accounts payable (AP) solution. Improved efficiency. The AI-powered AP system streamlined processes, reducing the time spent on manual data entry and reconciliation. Reduced errors. The system's automated features minimized the risk of human error, ensuring that payments were made accurately and on time. Increased compliance. The AI-powered AP solution helped Imerys meet regulatory requirements and maintain compliance with industry standards. Implementation and deployment. Imaris implemented the AI-powered AP solution across 14 countries within just 6 months. This approach focuses on identifying and mitigating risks, ensuring that financial reporting is accurate and compliant with regulatory requirements. Compliance-first approach. The compliance-first approach is a methodology that prioritizes compliance with regulatory requirements over other business considerations. This approach is gaining traction among CFOs and compliance professionals, who are under increasing pressure to ensure that their organizations are operating within the bounds of the law. Improved financial reporting. A compliance-first approach ensures that financial reporting is accurate and compliant with regulatory requirements, reducing the risk of errors and fines. Reduced risk. By identifying and mitigating risks, organizations can minimize the likelihood of non-compliance and associated penalties. Increased confidence. A compliance-first approach can provide stakeholders with increased confidence in the accuracy and reliability of financial reporting. Implementing a compliance-first approach. Implementing a compliance-first approach requires a coordinated effort from finance teams, compliance professionals, and other stakeholders. Further details on this topic will be provided shortly.